Hey folks, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. The first one is I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks that are gapping higher or lower at the open, generally as a result of either an earnings announcement or some other related news event. When these stocks gap higher or lower in the morning, it creates an opportunity. And the opportunity for traders is when they can identify a specific price where these stocks will trade to like a magnet and then have a price reaction from in the other direction. In my course, I give traders everything they need to know in order to trade the gap successfully. What criteria are we looking for? What type of stocks are we looking for? What type of volume are we looking for? And of course, all importantly, how do you calculate these specific price levels? We're going to look at a couple examples in this video alone of some morning gap trades. But before we do that, I want to discuss the other thing I do, which is give traders an opportunity to get my gap trades sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time, 30 minutes before the markets even open for business. Here's a copy of the email that went out this morning to my traders, and as you'll see, there were 7 potential morning gap trades on the board today. Not all these stocks are going to hit the specific price levels that we want. What we want are the highest probability trades on the board. So when a stock does come in to the specific price level that's taught how to calculate in the course at Lazy Gap Trader, those are the trades that have the highest probability of success. Those are the only trades we want to take, the trades with the greatest odds of success. Out of this list, 2 stocks hit their specific price levels today. The first one was Celgene, CELG, gap lower, support levels are $123.28 and $120.08. Stop and profit target is about 50 cents to $1.10. These are minimum profit targets. Sometimes we get the minimum gain and sometimes we get a whole lot more. The other stock that hit its price level today was Skechers down at the bottom, SKX. Gap higher, resistance levels are $32.46, $34.56, and $36.67. Stop and profit target is about 30 to 55 cents. These are scalp trades that can turn into longer-term day trades, and for much more gain than listed here, these are the minimum profit targets. I'll explain this further. Let's go back to the charts and we'll start with Celgene. We're on a 5-minute chart of Celgene, and as you can see, the stock closed yesterday all the way up near $136 a share. This morning in the pre-market, the stock was getting a nice significant haircut that created the opportunity. The opportunity for us is when we can identify a specific price where this stock will be drawn to and have a price reaction from in the other direction. And you'll see within the first couple of minutes of the day, Celgene came into our price at $123.28, went a little bit lower, went right about to our stop loss limitation, and immediately reversed, and in the next 5-minute candle of the day, making a high of $124.53, which represents a gain of well over $1 per share. Sometimes these are scalp trades, sometimes we catch the low of the day and we get runners that go up several dollars. As a result of that, in my course, I teach traders a specific strategy where we're taught how to take some of the profit along the way and turn the rest of the trade into a risk-free, emotionless trade, allowing us to capture the ones that give us gains in just a matter of minutes or hours of 4, 5, 6% and more. You never know which ones they're going to be, so you want to position yourself to catch those gains. Today with Celgene, it was a scalp trade, but it was exactly what was prescribed in the email that went out to subscribers before the market even opened for business. And you can see as I make this video, Celgene is fighting to get back to that level after going below. And what this does is it shows you the importance of these price levels. The price levels that I teach traders how to calculate are important to these individual stocks. Traders learn exactly why this is, which gives them an added confidence when trading these gaps because they have the expectation that these price levels are important and they will produce a price reaction in the other direction. And I can tell you, having an understanding of why these price levels are important is extremely beneficial to traders. What it does is it opens up a whole new world as to why certain things happen in the market, and it takes a lot of the mystery out of trading. Now, Skechers was gapping higher at the open by a tremendous amount. The stock closed yesterday around $24 a share. The stock was gapping significantly higher at the open, and the level identified in the morning email was $32.46. This was a level where the stock would be drawn to like a magnet and have a price reaction from in the other direction. You can see where the stock opened right around $31 a share and began to trade higher. And watch what happens when the stock comes into the $32.46 area. It has an immediate change in character at that level. It trades up to that level and immediately stalls out. And here we go. Here's the candle at 10:15 a.m. that pulled back, making a low of $31.91, representing more than a 50-cent gain in just a matter of minutes from hitting the level at $32.46. That's a fantastic scalp trade on a specific price level we identified on a stock that was up 30% from yesterday's close. It pretty much stopped on a dime at $32.46, give or take a few pennies. Now the stock's trading above that level, but this trade was over, and you can see the importance of the level. Even though the stock went above that level, it came back in to retest that level. What was once resistance now becomes support. So once the stock gets above that level for a considerable period of time, it now becomes a potential support area for the stock, and that's what we're seeing now. Look, folks, this is a strategy that you can learn how to use for yourself each and every day for the rest of your trading career. If you want to learn everything you need to know in order to trade the gaps successfully, then come over to Lazy Gap Trader, check out the course. It's a strategy that will take a lot of the guesswork and mystery away from the markets, and it's something you can use each and every day for the rest of your trading career. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.